This week's commentary is entitled, Did You Know? We're going to look at a different perspective that you might not know around markets and also cover some things going on here at 10 Capital that you may not be aware of either. So welcome to our commentary this week. Did you know? The first thing you should know, if you hear a nice conga beat in the background of this week's commentary, it's because there's a fiesta going on with the food trucks right outside our window. The purpose that we want to cover today, twofold. Number one, some things to know about the market that hopefully will help you put some things in better context, be prepared for what's next to make great choices. Secondly, some things that are going on here at 10 Capital, all within the spirit of giving you information and insights that you may not be hearing elsewhere. So let's start with the markets. Confusing time frame, frustrating time frame, geopolitical issues, highly politicized environment. You had last year where you basically came just shy of having 3 corrections, and you hadn't had a year with 2 since World War II. And what do you make of all this stuff? And for a lot of people who look up and have been looking at monthly statements or just the S&P 500 itself, up in, through the middle of last week before the Fed announcement, you had had almost a 17-month run with only a 3% total return in terms of price within the S&P 500. So again, that leaves a lot of people understandably confused, wondering what's next and what to make of it and what kinds of decisions they should be making. So not to say I told you so in any way, shape, or form, but one of the things we want to do in these commentaries is help prepare you emotionally for what's next. This isn't about managing trades or trying to time things. It's about managing portfolios and helping you better understand how to both build and maintain wealth over time. And to that end, back in December of 2017, we wrote a piece called Floors and Ceilings. And what this is about, and this is the first big did you know, is that corrections and recessions can happen not only in terms of price, which is how most people think about them, a market dropping 10%, 2 negative quarters of GDP growth, a drop again in price or movement or growth, but they can also happen in terms of time. It's more complex, it's less talked about, there aren't some cute lines to put around it like the first part, but again, it's true, and you can look back if you do over economic and market history and see these times where again, growth, whether that's again in price or GDP growth, just flatlines over a period of time. We saw this from late 14 to mid 16, and we wrote about that in middle of 16 and said, with a piece we entitled, Are we waiting for something that's already occurred? Where basically everyone who was waiting for a recession, we said, hey, it happened. We may not have hit the technical definition, but we just had it. That proved to be correct as the market then rebounded into 2016 and 2017. And at the back end of 2017, we said, hey, we think we're entering into another one of these environments. And the reason we think we're seeing more of these flatline recessions is we're not getting the boom bust of prior years. It's been a pretty tepid recovery in terms of economic growth since the Great Recession. And so again, you just see things kind of hit a stall speed, not the crash that so often indicated market recessions and corrections in some of the preceding decades. So where do we think we go from here? More of the same here for a little bit of time. So the comps year over year are still pretty difficult. We're talking rates of change. That's ultimately what really moves markets is, are things growing faster or are they slowing down more? And last year's economic data, in part because of the tax cut, pretty good. So that's making things pretty hard. And we've warned you about that again earlier this year, that the first half was likely to be difficult, but that we thought that might give way into the back half of this year and into early next. That continues to be the thesis in which we work on. So what do you make of that as an investor? Well, if you're in the distribution mode, this is why we've pounded the drum for some time around creating enough free cash flow to live on without having to sell off things so that you don't cannibalize your portfolio. Flat and down markets are a killer for a person's longevity of their portfolio. And so, but there are, again, ways around it, and that's a big part of it. Second piece of that, for people in the distribution mode, is having some lower volatility, more conservative positions, that when you do get a sell-off, not only do you get to spend that cash flow today, but you get to average down into those positions to help you have a more profitable account in the future. For the accumulators, you just take heart. You understand that, hey, this is the opportunity to buy in cheaper prices. As those paychecks roll in and you're earmarking a percentage of that to save, whether it's into your 401k or another account, these are those opportunities that actually will help you build more wealth over time than if things had just moved in a nice straight line. It's true, you can do the math or you can call us and we can show you. Nobody knows what's in Trump's mind. Nobody knows what's in Xi's mind. I've said this before. We don't put our faith in politicians. Our faith, our belief that ultimately things will move higher over time is about people and the companies that they work for or have created, and that they adapt. And we're seeing that adapting happening already around this trade war with Nintendo and Foxconn and Apple and others talking about moving some of their manufacturing to other parts of Southeast Asia. People are extremely resilient, they're innovative, they're hardworking, and that's again where you put your faith, regardless of one's politics or worldview or take on the current trade conflict, that will again help things lead higher over time. History is replete with these wars, assassinations, diseases, markets trend higher. Why? People, resiliency, creativity, and those things, again, that they continue to bring day after day after day. The other piece that I want to talk about this week that you may not be aware of, that's our market take again on it, is some other things we're doing here at 10 Capital to help you get to know us better, as well as some of our clients and friends in the community. So firstly, right below this video, or you can go to our Instagram page, our Facebook page, we've started doing for over a year now pieces called Weekly 10. And these have really only one purpose. It's to let you, our clients, in a little bit more into who we are, certainly friends, prospective clients as well. Who are we? How do we think? How do we differentiate ourselves between other people in our industry? They aren't market driven. They're really, again, people driven and wanting to help, again, convey the spirit of what 10 Capital is about. The last few have been great, as Dave and Mike Gordon have kind of shared some of the insights that they've gleaned from their first 6 months here at the firm that I'd highly encourage you to check out. Lastly, you may not be aware, but I do a podcast. The reason for this podcast, quite simply, is one of the best parts of my job is the clients I get to work with, the people in the community that I get to know, and hearing about their struggles and their successes and their takes on life and how to live it to the fullest. And we wanted to share some of the best of those stories with you. So there's everything from Jason Sutherland, a director in Hollywood, to Randy Anderson, the manager at Griffin Funds, to one that's going to be coming out soon, Cammie Bradley, obviously well-known singer here in the area. But really, again, what we're looking at is what drives them and sharing some of those stories that hopefully are at least of interest, but might even be of help to all of you. So with that, thank you so much as always for your time, your attention, support, and we'll see you soon.